Vodafone Group plc is one of the world's largest telecommunication companies. They are the second largest mobile carrier by subscribers in the world. The name Vodafone is a combination of the services they provide. They provide services including voice, messaging, data, fixed broadband, and TV. Vodafone has 470 million mobile customers, 14 million fixed broadband customers, 9.8 million TV customers, and employs about 108,000 people. They have mobile operations in 26 countries, partner with mobile network providers in over 50 more, and have fixed operations in 17 countries. The group's operations are split into two geographic regions, Europe and Africa, and Middle East and Asia Pacific, AMAP. The history of Vodafone starts from 1984, when they were incorporated as Racal Strategic Radio Limited. They had a demerger in 1991 and their full listing on the London Stock Exchange. In 1999, their merger with AirTouch Communications, and they had a 45% stake in the formation of Verizon Wireless. They acquired Management AG for acquiring further business in Europe in 2000. In 2006, they disposed of Vodafone Japan, and they acquired Vodafone Turkey. In 2007, they acquired a controlling stake in Vodafone Essar, now Vodafone India. 2009, Vodafone Australia merged with Hutchison 3G Australia. Vodafone Group became a subsidiary. In 2010, disposal of the interest in China Mobile. 2011, the sale of their interest in SFR France. 2012, the acquisition of Telestra Clear in New Zealand, the acquisition of Cable Wireless Worldwide in the UK. 2013, the acquisition of Cable Deutschland in Germany. And in 2014, they sold their 45% interest in the Verizon Wireless. They acquired Hellas Online in Greece, acquired Ono in Spain, acquired Cobra Automotive in Italy, and the ownership of Vodafone India and Italy increased to 100%. Telecommunications industry services 7 billion mobile customers around the world with about 1.65 trillion euros in revenue. The major competitors are 3 Rogers Communication, EE, AT&T, Verizon, China Mobile, but for the sake of this presentation, we will focus on the following competitors. Origin, a French company in 29 countries and has 263 million customers. Deutsche Telekom, you may recognize them as T-Mobile in the United States, present in over 50 countries, Germany, Europe, and the US included with its own infrastructure, and BT Group, servicing the needs of the UK and 180 countries worldwide. In terms of top management for Vodafone, Vittorio Caleo is the chief executive. He was appointed chief executive of Vodafone Group after July 29, 2008. He joined the board in October 2006 as Chief Executive Europe and Deputy Chief Executive. In 1996, he joined Omnitel Pronto in Italy, which subsequently became Vodafone Italy. He was appointed Chief Executive in 1999. He was then appointed Regional Chief Executive Officer, Southern Europe, and for Vodafone Group plc in 2001. He became a member of the board in 2002, was appointed to the role of Regional Chief Executive Officer for Southern Europe, Middle East, and Africa in 2003. In 2004, he left Vodafone to join RCS Media Group, the leading Italian publishing company, where he was Chief Executive until he rejoined Vodafone as CEO Europe. His salary is about $18 million US. Next in top management, we have Nick Reed. Since joining Vodafone in 2001, Nick held a variety of senior roles, including CFO, CCO, and CEO of Vodafone Ltd, the UK operating company. In his role immediately prior to Group CFO, he was Regional CEO for Africa, Middle East, and Asia Pacific for 5 years, and was on the board of listed companies of Vodacom, Safaricom, and Vodafone Qatar, subsidiaries in India and Egypt, and joint ventures VHA in Australia and Indus Towers in India. His salary is about $4.8 million US. Other top management include Serpil Timuri. She is the Chief Commercial Operations and Strategic Officer. Nick Jeffrey is the CEO of Vodafone UK. Brian Humphreys is the Group Enterprise Director. And Johan Weiberg is the Group Technology Officer. The graphic on screen displays some of the main points from the annual report. Vodafone's aim is to deliver value for society and returns to their shareholders, delivering long-term benefits to society by providing access to digital services, Their scale enables them to invest in superior gigabit infrastructure while delivering an excellent customer experience that drives revenues and cash flow generation, allowing them to reinvest and provide attractive shareholder returns, a virtuous business cycle. In terms of financial analyst statements, the Value Line analyst quotes, "We are optimistic about Vodafone Group's operating performance over the 2021 to 2023 span." This was March 16th, 2008. The other analysts include analysts from Goldman Sachs, Morningstar, Argus, and Edward Jones, which all rate Vodafone as a buy. Their business in emerging countries like Africa offer expansion opportunities where they have a lack of alternative fixed-line infrastructure and income levels are on the rise. They have sufficient finances to make more acquisitions. They plan to acquire CYTA Telecom Hellas for around $145 million US, and there have been reports of another transaction with Liberty Global where they already have a 50-50 joint venture in the Netherlands. Long-term capital appreciation potential lies comfortably above the Value Line median, and dividend yield and prospects for further increases are another feature. They think the chance of future merger with Liberty add speculative appeal. Some recent news about Vodafone includes the New York Times article where Vodafone Group and Idea agreed to merge their Indian operations in March last year, potentially creating the country's biggest telecom business after the new entry of Reliance Jio Infocomm sparked a brutal price war. And this article was about their new CEO for the company. The next article talks about the European assets that they might buy from Liberty Global, and after the announcement of this, Vodafone's stock rose about 3%, while Liberty Global's stock rose about 6%. They both operate in countries like Germany, Czech Republic, Hungary, and Romania, and they're considering a full merger. Vodafone's most current press release was March 29, 2018, where they announced the completion of the sale of Vodafone Qatar. But the most interesting press release I found was February 27, 2018, where they announced they are working with PT scientists, the first privately funded moon landing mission, due to launch 2019 from Cape Canaveral. They are working with Vodafone Germany and Audi to achieve this. Vodafone Germany appointed Nokia as technology partner to develop space-grade network weighing less than a bag of sugar. This 4G network will enable the first live streaming of HD video from the moon's surface to a global audience. In terms of competitive stock price, Vodafone since 2013 has appreciated about 8.47%, while Deutsche Telekom and Orange have appreciated over 50%, but BT Group has depreciated about 4%. This looks like a large difference. However, this is Vodafone's NASDAQ price as opposed to Deutsche Telekom and Orange's price on their home exchanges, which can account for the price difference. On the right side of the screen is a list of the most recent insider trading activities. The last trade was November 13th, 2017 by H.M. Strelter, and other top insiders are listed on the left-hand side of the screen. Vodafone's PE ratio is a 19, with their competitors respectively 12.65, 9.2, and 15. It's not very overvalued based on this PE ratio. However, our investors are willing to bid a higher price because of the name, and we trust the brand. The dividend yield is also higher than all the competitors. The bond rating is on par, but it is a bit riskier than the other stocks in accordance with the beta of 1.1, which accounts for the bond rating being a bit lower. Vodafone's capital structure includes a total debt of around $49.8 billion, while their total market cap is $76 billion, which is relatively high. That's over 50% of their market cap is debt, and the ROE is 5%, which is quite low for something like this. So they have a lot of debt but a low ROE, which is something to consider when valuing a stock. Vodafone's earnings per share in 2010 were 3.4, while in 2015 they dropped significantly to about 0.026. In 2019, they are estimated to go back to 1.1, which is good for the future of this stock. The dividends per share are pretty steady, around an average of 0.15, and the book value per share has been decreasing as well. BT Group has significantly lower earnings per share than Vodafone, and their book value per share is also quite low. It was negative in 2015. For Orange, you see the same pattern as you did with Vodafone's earnings per share. It was about 1.5 in 2010, dropping to 0.5 in 2015, and their earnings per share for 2019 is estimated at over 1. Deutsche Telekom's earnings per share are steadily increasing each year, while their dividends per share range around between 0.5 and 0.8. Their book value per share, however, is the highest out of any of the competitors. As I mentioned in the history of Vodafone earlier in the presentation, they have participated in many mergers. The most recent is Vodafone India and Idea in March 2017, which we learned a bit about earlier. The joint venture in February 2016 was between Liberty Global and Vodafone Netherlands. And Vodafone agreed to acquire Ono for a total consideration equivalent to 7.2 billion euros in March 2014. The group's activities expose it to financial risks of changes in foreign exchange rates and interest rates, which it manages using derivative financial instruments. The use of financial derivatives is governed by the group's policies and approved by board of directors, which provide written principles on the use of financial derivatives consistent with the group's risk management strategy. Derivative financial instruments are initially measured at fair value on the contract date and subsequently remeasured to fair value at each reporting date. The group designates certain derivatives as hedges of highly probable forecast transactions or hedges of foreign currency and interest rate risks of firms' commitments, cash flow hedges. Under the group's foreign exchange management policy, foreign exchange transaction exposure in group companies is generally maintained at lower than 5 million euros per currency per month or 15 million euros per currency over a 6-month period. In terms of political risk, Brexit is the most prominent issue for Vodafone as they are headquartered in the UK. A cross-functional team led by executive committee members has identified ways in which Brexit might affect the group's operations, but there remains insufficient information about the post-Brexit arrangements between the UK and the EU to make any conclusions about the probable impact. The large majority of customers are in other countries other than the UK, accounting for most of their revenue and cash flow, which could be a problem. Each of the national operating companies, however, is a standalone business incorporated and licensed in the jurisdiction in which it operates and able to adapt to a wide range of local developments. Their ability to provide services to customers in countries in which they operate, inside or outside the EU, is very unlikely to be affected by Brexit. Depending on the arrangement between the UK and the EU, two issues that could directly affect the operations are the creation of a data frontier between the UK and the EU. The inability to move data freely between the UK and the EU countries might cause them to have more technical facilities and affect future network design, as well as inability to access the talent that they need to run multinational group operations from the UK. So the restriction on who can work for them and who can't based on visas. Another issue that could affect Vodafone due to Brexit would be revisions to macroeconomic performance in major European markets, including the UK, which could affect the economic climate in which Vodafone operates, impacting the performance of the operating companies in those markets. Vodafone's past performance has been very positive, especially with all their mergers and acquisitions that have strengthened the company over the years. Their Verizon position specifically was very profitable for them and a great past decision. Their 45% stake that they sold in 2014 was a great decision. As far as future perspective goes, most of the analysts agree that this is a buy stock, and in a recession, cell phones are inelastic. People will always pay the price for them, especially in emerging markets where the infrastructure doesn't allow them to view this product as elastic. So I think that their future perspective is very great. Overall, I think this is a buy stock because the price is relatively low, around $27, and it yields around 6%, which is a relatively good yield for a stock like this. And again, it is a household name, so it is more likely to do well in a recession. So I think this is a great stock to buy and a great ADR to add to your portfolio. Thank you for listening.